in partnership with CommSec.
All right, talk of trade and potential trade wars, that's not going to be good for the stocks. Joining us live now, Tom Piotrowski over at CommSec. So am I right, Tom?
Well, Pete, I suppose the context is important here. So you're absolutely right in terms of the markets calibrating their expectations slightly differently now in the Trump 2.0 administration. Having information delivered via social media was the norm in Trump 1.0. So this is just going back to an old playbook. And I'm talking about the tariffs that were essentially made public or reiterated at least by Donald Trump on social media in Asian time yesterday. It caused the downdraft for regional markets, but since then we've seen Northern Hemisphere markets take this news largely in their stride. Wall Street has essentially moved higher from lows made earlier in the session. The Dow was down as much as 0.2%. It's flat as we speak. The S&P 500 up by 1/3%, and the Nasdaq up by about 0.5%. Interest rates, which had fallen quite considerably in the previous 24 hours, have just bumped a little bit higher, but a 10-year Treasury note is at 4.31 at the moment. That might not mean a lot, but you have seen interest rates fall by about 0.25% as far as long-term bond yields are concerned, and that's part of the reason why stocks have been sustained by that move lower where rates are concerned, Pete. So it's been volatile. It's been a case where European markets have seen downward pressure on their export-facing industry. So car makers have been under a fair bit of pressure in Europe, and that's part of the reason why the German DAX was down by around 0.6%. The futures are pointing to a loss of around 0.4% for the ASX 200 today. The feature of the day will be the release of the October inflation figures. We'll see a little bit of a bump higher here as far as the headline rate of inflation is concerned to 2.3%. But to be perfectly candid, the market's not going to be attaching a whole lot of weight to these inflation numbers. They're the monthly ones to begin with. The market prefers the quarterly figures, and they understand the impact of the electricity subsidies on these figures as well. So it's a bit of a dead rubber.
Okay, Tom, thank you.